Well,
Hey,
what's up, brother?
hey Dylan, how's it going, bro?
Living a dream, dude. Excited to rip here, man.
I guess we can first start off for listeners like who don't know Dylan LeClair, the man. What what's your background? How'd you get into Bitcoin? What do you do exactly? All that kind of high level thing.
Yeah, man. So, I mean, for those who don't know, I'm sure probably a lot of the listeners do. We started just talking, I think, over Twitter DMs, what, in March, February, something like that.
You had
Yeah, just
2,000
about Bitcoin.
followers.
I think you had like 8 or something. And I think, yeah, I just saw, I think Preston Fish retweeted one of your things. And at that point, and I think February, March, I had just started working for Bitcoin Magazine. Um, I, I guess just to go a little into my background, like I found Bitcoin in 2018-ish for the first time and didn't really do any digging. I mean, I was a junior in in high school, but I think just always being a numbers guy, I went to like the financial side of things. Just didn't love science. I was like, all right, screw it. Like I'll learn finance, learn economics, or like try to make it from a business lens. I like solving problems. I went to school just in my hometown state business for a year, and I mean, I love school. It was the environment's awesome. The social scene is great. You're living it right now. I'm living it right now. It's awesome, but the academic side of things left a lot to be desired. You, funny enough, like we kind of took this like quite a similar path in terms of like both realizing that and the value prop of boomers teaching Keynesian economics, just like an outdated theory or an outdated just like frame of thinking. And so just like was ripping Twitter. I've been using Twitter probably too much for the last 18 months. Just like, at first just not even really sharing my thoughts, but just learning behind the scenes from like so many smart people and like just consuming all the content. And that kind of changed in March or February, March when I joined BM and started just doing some of their media stuff and just kind of slowly transitioned from doing media to doing some sort of content news aggregation coverage to now my current kind of job is we have a newsletter called, or like I guess a newsletter called Deep Dive, which is, we cover like macro on-chain analytics and like derivatives, just everything that's happening. So like I lead that off with my boy Sam Rule, who's killing it. Yeah, I mean, basically just kind of look at what's happening in the Bitcoin market and just try to document its rise. And so, I mean, it's a blast. We just get to hang out all day and share our thoughts, and we text for the most part every day. So, I can't complain. I'm definitely living the dream.
Yeah, for sure. It's been really cool to see you blow up as well. I think once you started kind of curating your Twitter and you kind of really turned it into this like data feed, then you just blew up, man. And it's been really awesome to see that recognition. And by the end of the cycle, no doubt in my mind you'll be at 200-300K at least at a very minimum. So keep up the great work, man. One thing you were touching
Appreciate it.
on that was you're just talking about your newsletter. For me, I found that the newsletter has been a really good way to kind of articulate my thoughts and kind of have this diary almost where I can go back and see what my thought process was at any different time in the market, going back over since I started it, I think at the end of April or the beginning of May. You actually do it daily, so I'm curious, do you go back ever and like relook at your newsletters and kind of see what your thought process was? Because I know I've gone back on a few of mine before and like cringed out and been like, oh man, like this is pretty bad. And then you learn through that. You look at you know was my thought process similar to the situation that we're in now when the market structure is similar, and then kind of understand perhaps some of your like psychological biases and stuff. But do you notice any of that?
Yeah. So I mean, I guess I would say first to preface, like, I'm a perma Bitcoin bull that roots for the price to go down, essentially. And obviously can't lose because it's when number go up, it's great. But I have like the deep dive newsletter, Bitcoin Magazine's team in general, for the most part, like share this view. And my kind of thesis about Bitcoin is that it's the best form of money the world has ever seen. It's and will be the dominant digital monetary proof of work network, and that essentially it's reached a critical mass where it's already won. And so just being like, we examine everything from the deep dive with that long-term thesis. And then we kind of zoom in on like, cycle to cycle, month to month, week to week, and sometimes day to day time frame, be like, here's news, here's what it could mean, or like, here's for example, like, here's the derivative market and everybody's short and funding is negative, and then here's spot, like in July, like I was just looking through those posts. Said we're actually transitioning to Substack, which I'm really excited about. It's just much more of a clean platform and easy to access, and I think it'll be a net benefit. But I was just looking through that kind of my day-to-day like diary, like you're saying, and it was like July 22nd, and it was like we wrote a dichotomy emerging, Bitcoin spot, and we were showing a liquid supply change and how there was a massive accumulation, a reaccumulation occurring, and that how the derivative market was more bearish than it's ever been, and that the futures yield at 1 month, 3 month annualized yield was zero or negative. And so it was like, hey, like, this is, again, like, we've never said sell your Bitcoin, but we give just kind of like a probabilistic view on things like, hey, potentially explosive short squeeze, or like, hey, the derivative market's a little bit over levered, so maybe don't sell the farm and ape into a leverage position here. But it's all kind of constructed with that long-term thesis of Bitcoin is going to eat the world, more or less.
Yeah, totally. When you were talking about like the basis over summer, I remember like CL made a post and he was like, if you bought Bitcoin every time the basis went negative, I mean, you'd be in pretty damn good shape. I think like when we talk about funding, a lot of times people need to understand it's all like in context, right? Like we had positive funding the whole beginning of the year, but it's usually when funding diverges from price. So either A, as you talked about that, I mean, what me and you were like riffing on about this at the time. We are like, oh, we're gonna get a big short squeeze, right? Because you had funding going negative as open interest as a percentage of market cap was really rising, right? And then price was going the opposite direction. So essentially, all these traders were fading the rally, so fading like the spot market on leverage, and you just saw more and more contracts coming into the system. And then another tool too, I don't know if you use this, is the leverage ratio on Glassnode. It's not perfect, but it kind of can give you a good little ballpark essentially of like how collateralized these traders are, right? And then also like this is something I've seen you put in your writing before, is just the percentage of the collateral that's either crypto or stablecoin margined. And so when you have a lot of shorts that are margined with stable coins, then you're a lot more susceptible to a squeeze. Do you want to speak on that? Because I know you wrote like a whole piece on this. I'll kind of let you grab for a minute.
Yeah, so I think first, when people like, there's a lot of stuff out there about derivatives, and just like from the outside in, if you don't know anything about financial markets, or even like, and again, I don't know if this is satire, but like Michael Burry last night being like, do Bitcoin shorts need to be collateralized? Like essentially saying that, like Michael Burry, like Wall Street legendary investor, bought credit default swaps on the system, and he's like, if it was satire, then fair play, GG, you got everybody. But if it wasn't, then this man doesn't understand the derivative markets either. So like, it's fine, don't feel bad. But I think the first thing that I hear a lot of people are confused is like, derivatives are manipulation, and it's like, no, it's not. Derivatives are just layered bets on a directional price prediction for Bitcoin, and it's essentially they can for a little bit whipsaw price or suppress price or bet on it to to go in a certain way. But ultimately, with a derivative, you enter a position, you have to exit. With spot, I buy spot. You're shorting fiat when you're buying spot Bitcoin, and you never have to cover. But with cover, as in you have to buy back your short, you have to sell that position. But with a derivative, you enter, you always have to exit. So that open interest, that trade always has to come back in. And so, you'll see like a lot of explosive moves, and people will be like, this is manipulation, when in reality, it's an imbalance. It's a dislocation that's correcting in real time, and it's driven by the spot dynamics. So that I think that's just like the first thing. When you're talking about leverage in the system and how it's collateralized, I think that's a thing that a lot of people don't understand. Like, talking head on CNBC about the Bitcoin price, they don't look at this data or understand it. But it has a big impact. So earlier in the market cycle, this in 2021, Bitcoin's going parabolic. It was at $10,000 in November, October, that purgatory of 9 to 10 to 11K for the whole entire summer of 2020. We go parabolic, break all-time highs, Bitcoin's ripping, everybody's levering up. And it works. You can lever up because there was such an influx of capital to push up that spot side of things. So if you're levered long, you're just riding the tidal wave of spot inflows of capital. But towards that top point, with the top, the market top, and I think this is psychological as well, coming with the Coinbase IPO on April 14th, you saw a growing percent of that open interest was Bitcoin or crypto more with the markets more broadly. But if we're just focusing on Bitcoin markets, just as like a representation and also the biggest driver of crypto, an increasing amount of Bitcoin open interest was margin or collateralized with Bitcoin. So there's a convexity there on the downside where if your position's losing value as the market draws down, well, your collateral is also shrinking in value. So your liquidation price is moving up. And so this is obviously there's a convexity there that doesn't favor bulls. But Bitcoin is easy collateral in the ecosystem because that was what the first exchange, like futures exchanges, perpetual swap contracts were built on. Like there was no stable coins. And even then, like just Tether's so big because there was a big demand for this dollar collateral that didn't decrease in unwind and leverage during a downturn. And so the top of the market at April 14th, we saw like 70% of the derivative market was collateralized with Bitcoin. And since then, we've seen just a pretty massive reduction in terms of open interest with Bitcoin. And you're seeing, I think now, 55% of that market is stablecoin collateralized. So it's the opposite dynamic where during a drawdown, your collateral is not decreasing in value. But during if you short with dollars, if you short Bitcoin in the derivative market with dollars, well, as the Bitcoin price pumps, you have to increasingly over collateralize to remain solvent. And so that's what led to that huge short squeeze in the end of July. We saw like the Binance contract go from 32,000 to 48,000 in the most volume market in crypto went up $16,000 in an hour because of the massive amount of stablecoin Tether short. So Tether was actually pumping the market because it was being artificially suppressed, which is kind of funny for the bears. But yeah, I mean, these are just some of the dynamics that are happening under the hood that really kind of change what the market outlook is looking like.
Yeah, I think the two of us both learned a lot over the summer because I think both of us got for better or for worse, it was our first real kind of Bitcoin hype cycle. And so I think to an extent both of us kind of got caught up a bit in the froth. And I think over the summer we really kind of hunkered down and tried to understand the market better and be a lot more objective. And so I think some of these things that we now recognize were perhaps topping signals from earlier this year. I think this time around, we'll be able to recognize some of these things and kind of approach it from, a more level-headed standpoint. What are some of the other things, looking back, obviously, for some people may say this is cope, but, what are some of the things that you look at now that you're like, oh, if I knew this back then I probably would have been more bearish. For me, like, from an on-chain perspective, the first thing that obviously comes to mind is the liquid supply shock ratio. That was a huge leading indicator of the drawdown in May. You saw that tick down pretty heavily right before, about a week or two before we started moving down. And that wasn't created, I don't think I made that until like right around July 4th, actually. And then also the exchange flows, you started to see like insane amounts of coins moving to exchanges right before then as well. Like the record daily inflow of coins to exchanges right before we dumped. So what are some of the things that perhaps you're going to be looking at now to indicate perhaps we're getting a bit frothy that you learned from earlier this year?
Yeah, so one of the things that we were really excited about in I think the early months of 2021 was the contango, the famous contango, which was which is the yield you can arbitrage or capture from selling futures contract in a date into the future and buying spot Bitcoin. So Bitcoin is a futures market, just like oil does, just like gold does, just like corn or any really commodity with a supply chain. And so I can buy the right to Bitcoin in December 2022, and I could do that in February. And so the basis on this just really blew out. And so what you saw was, I think that this basis went to 48%. So like you could get an annualized return of 48% in mid-April from selling a future and buying the spot. And I think at one point Bitcoin futures hit like 88,000 or something, which is really insane. And so that was that had me feeling bullish. But I think when you're hitting those sort of yields with Bitcoin as like a $1 trillion asset, what it really meant was that there wasn't that spot bid coming in. Everybody that wanted to kind of capture this trade had already captured it, had already executed this market neutral trade, which is buy spot, sell futures. And so once you make that trade, you can't do it again. And so that to me, if we see a sustained, like I think 20%, annualized cash and carry yields are extremely bullish, because you're just telling everybody in TradFi and in Wall Street, hey, figure out a way to come in here and take advantage of this. And we can talk about the potential ETF, but the one reason I think the CME thing is bullish is because there's essentially going to be a ton of boomer capital that doesn't care and just buys the product, even though it'll probably underperform Bitcoin and have some fees, and they'll just bid up the CME the CME futures price, which will increase that relative to spot, and it'll encourage people to come in and take advantage of this risk-free rate. And when they have to do that, they have to buy spot. So it's like an indirect it indirectly leads to more spot capital coming in theoretically, which is kind of why I'd be bullish on that if and when it probably comes. But I think just if you're looking at the leverage in the system and you really see the futures basis blow out again, like again, I'm a perma bull, and it's going to be very challenging to part with like any of my bag and at a potential top. It's going to be very challenging, and like I don't know if I'll do it. I rather would just leverage long with bottoms for the most part, and not like in a degenerate way, but just increase leverage a little bit on bottoms instead of trying to time tops. I think a lot of people probably got burned in 2017, but if we see that basis really blow out, and especially if crypto margin, Bitcoin margin futures increase relative to dollar margin, then it'll be like, okay, well maybe we do need to correct here, eliminate some imbalance and wipe out the excess.
Yeah, totally. And like one thing you mentioned was, if we get like a futures based ETF, it's going to bid up the CME curve. Whereas earlier this year, you saw CME was completely falling behind all the other overseas based exchanges. And we're talking about like Deribit, Binance, FTX. So I think one thing that's interesting is, if we can get the CME curve to be bid up the way that the other exchanges were earlier this year, it's going to unlock this US based capital, where earlier this year they couldn't really get access to this cash and carry trade because it was over via these overseas exchanges, which due to regulatory restrictions they can't access. So obviously the way Bitcoin is, it's global, so we're going to still benefit if people overseas are taking advantage of the cash and carry trade and driving capital into spot. But I still think that it's just an interesting note that you're going to have now, all these U.S. institutions or hedge funds that are now able to access this cash and carry trade that weren't necessarily earlier this year.
Yeah, I mean, so like, what did we see early in January, or like even before that, December, with GBTC, which was like at the time basically the only way to access any sort of reliable Bitcoin exposure for like from the street side of things. I mean, there's some funds, or like there's Genesis and BlockFi, and like if you're a crypto hedge fund, which I think has its own kind of regulatory requirements compared to like a macro fund, you can just go buy spot Bitcoin with a custodian, but that it's kind of, you have to jump through a lot of hoops still, surprisingly. So it was like, all right, Grayscale, MicroStrategy wasn't even big yet. They weren't leveraged long their entire balance sheet yet. They just had a little bit of exposure. We saw more and more miners come into the market. So like, there wasn't real, and those aren't like, tethered one-to-one with Bitcoin. So GBTC was it. And so you saw a bunch of these macro guys, because GBTC is a trust and trades in the secondary market. you saw that trade at a premium to net asset value. So all this capital that does, I promise you, these guys, like most of them didn't, or at least didn't at the time, care about Bitcoin. They just cared about the yield. And so they're like, all right, like I can buy GBTC from Grayscale. I can bring $100 to Grayscale. They'll mint me $100 of GBTC that's locked up for 6 months. And right now it's worth $135 in the secondary market. And so like every single fund, especially at year end, came to do this trade just to mark up their books or to capture this, risk-free trade. And all of the unlocks came at the same time. And so you saw like that completely flood out the market. But the entire time, like you have GBTC as kind of this like spot-like instrument, not really, but that most funds can access. You see a lot of banking system and investment banks that are like have GBTC shares. Macroscope on Twitter is fire with the SEC announcements. You always see those coming in like that. We have GBTC, but CME was always the curve was flat, so there was no way to come in, capture any of this yield after GBTC's premium went to a discount. There was just no kind of market neutral way to get access the trillions of dollars in U.S. public capital markets. Like there's so much money out there that people can't even fathom. And so now if we see CME trade at 10, 15%, even like a 5-7% basis, because like it was pretty flat while Deribit, FTX, all these Binance were like 20, 30% in the beginning of the year. So if we see that consistent basis, then you can actually come in and do the trade with GBTC. You can do the trade with spot Bitcoin as it becomes more and more acceptable. And so I'm pretty bullish on the ETF for sure.
Sure, yeah. What are the things that like when you first wake up, what do you check? I kind of have like a little checklist almost mentally that I go through, and I'll look at like Coinalyze, Skew, Glassnode, and TradingView just for levels. What are some of the things? Do you wake up and check the news or?
Yeah, I probably check Twitter first, just to see what people are buzzing about. Well, I'll probably, if we're talking about Bitcoin, I'll probably check the price. I just see what's happening. And for much of the summer, it was just like, I think it's exciting because the next couple of weeks or months or whenever the all-time high pops, I think sooner than later, you wake up and you have zero idea what the price is going to be. Like it could gap up. Like the most exciting time was like in the late December, January, like when you wake up and the price is 21,000 and when you went to bed and it's 24, you're like, holy crap.
It's like Christmas Eve as a kid, you get that like butterfly feeling before you go to bed because in the morning.
And you can literally tweet out hashtag Bitcoin, like you'll get like an infinite amount of likes because everybody's just buzzing. Like that's definitely fun. So I would say when I wake up, I check Twitter, I check the price, and then I get to my desk and I'll just kind of work through the same kind of things. Check Glassnode, which is like such an awesome software. Not like the on-chain, they're adding all this derivative stuff. Like I think the on-chain trends, like we're looking at short-term stuff like exchange balances or, maybe Coinbase destroyed if someone, some old holder, transferred a lot of the stuff, but also like the cyclical long trends of like, long-term holders. What are they doing? I think, how we've seen recently kind of with long-term holders just continuing to be straight and to the right. Up, we're an all-time highs breaking every day, except for a little bit yesterday, but we'll see if that trend continues. But we're seeing like bear market hodler kind of dynamics or like accumulation, maybe not bear market, but accumulation dynamics that you see during consolidation, that you see during bear markets and bull market price action, which is like exciting because I think the reflexive part of this bull market is not even started, and I don't think it's particularly that close to starting. At least I hope not for the price's sake. So it's gonna be pretty nuts. But I just kind of run through that same Glassnode, Skew, TradingView. I'll check the mining prices and the S&P, the macro stuff. See what maybe the 10 years at. But I less and less care about that. Like the whole inflation, stagflation, what the CPI is, what the Jerome Powell is gonna say on a random Wednesday, like. When you're just long Bitcoin with majority or maybe over 100% of your net worth, then we know where this is going.
Yeah, totally. Why don't you talk a little bit about on-chain? So like I won't start babbling because my listeners have just hear me talk every single week about my thoughts.
Babble, bro.
No. I want to hear from you about like this new metric that you created. So your pin tweet about the long term holder, short term holder, realized price, and how you've kind of found some signal in that. So I think that'll be interesting, for listeners to hear about. And then also just your general outlook. So you touched on long term holder supply, which is one of the biggest themes that we've been tracking since the summer. But what are some of the other main things that you're looking at from kind of this broader market structure, what we're talking about is going to happen over the next 2-3 months, versus what do you look at on those shorter term timeframes in terms of on chain? Is it SOPR? Is it net realized profit losses? What are you looking at?
Yeah, so I mean, I think from the most like basic level, not even on chain, like not even derivative stuff. And I'm not a huge fan of TA, but I think there is value in looking at the chart. There is just it's the most pure form of the market's thoughts, condensed down into a visual. And so just looking at the chart, and I've just been like, shit posting, saying this over and over again, saying like vertical accumulation, and that's what's happening. Like during somewhat of a macro risk off, with the S&P and equities, they haven't, had a rip down, but it's not like up only, like you just a melt up like it has been since March. They've just been kind of chopping around and losing momentum. And so in that same time period, Bitcoin's ripped. It's up, 100%, 90% in the last 3 months or whatnot. So especially, recently the last month, it's up 25%, I believe. So just looking at that, there's something going on, and that something going on is, being confirmed by what we see every single day, which is people aren't selling. We see a record low amount of coins that have moved within the last 3 months as a percent of total supply. What Glassnode defines as long-term and short-term holders, it's kind of hard to explain in a quick Twitter response when people ask, they're like, what defines this? But more or less, it's 155-day threshold, but it's not a strict 154 is short-term and 155 is long-term. There's a weight to it. So around, I think, 110 days or so, it begins to gain weight as a long-term holder. And then I think at like 170 or 180 days, it's the coin is 1.0 long-term holder and 0 short-term holder. And that's because the UTXO, the probability of a UTXO being moved, the longer it's held, literally from the first block it's confirmed, decreases the longer it's held. And so that 155 days is basically like a statistically significant point of that Glassnode and their awesome data team found to be right. So that's what when we talk about long and short term, I think that's it's valuable to understand how that's computed. But that's basically what's driving these cycles, right? When you're looking at like yes, the halving has a big effect, but I think into the future it increasingly has less and less of an effect. And right now, what we're just kind of seeing is we're in a demand driven world now, where it's less and less of, I'm not a demand driven world in Bitcoin, but the new supply of Bitcoin, like that 900 a day, 450 in 2024, I don't think it's as significant as just the influx of capital that's coming in and the people that are saying we're not going to sell any of it, which is what we're seeing, right? Like the massive accumulation that we've seen in 2021. I think when you're looking at a lot of these trends, exchange balances, a liquid supply, a liquid supply ratio, exchange balance ratio, or percentage of total supply, there's all these inflection points in March of 2020. And I don't think that's a coincidence. I think that's because the world changed. And like you have like Michael Saylor literally said, and for me, like I went from buying Bitcoin and owning some Apple stock because I like Apple products, and having Bitcoin be 50% of what I got, and I'm just looking at stocks to invest in because I think I'm savvy, to going all in leverage long Bitcoin starting in this or like late spring, early summer, and continuing to buy every single day as much as I can. And that was because I think the world changed. The macro environment, the monetary system went from we're not on a good path to, okay, it's never going to be fixed. There needs to be a solution. I found a solution. And so that's just kind of what's happening. And we see little blips that, like we saw this summer in May, where derivatives get overexcited. There's just human psychology. People get overextended. There's this, massive kind of distribution. But when you're looking at like spot dynamics, all-time high long-term holder supply percentage, right? Like you see, there's a reason that every time it gets above like 80% long-term supply percentage, there's kind of, a parabolic run up. It's because like that supply is just getting tighter. That free flow is
Bitcoin's
just getting
float is at
smaller,
an
smaller, and
all-time
smaller.
low.
Yeah. And so that's essentially what's happening. And like that's why Bitcoin can rip during when equity markets aren't stalled, and like all the people that are trying to do cute correlations with, you know, Bitcoin and risk assets. Like, oh, Bitcoin's a risk asset. It's not going to perform if equities draw down. It's like, well, to an extent, yeah, it's true. In a sense that everything is short. When you're long any asset, you're short the dollar. So if the dollar pumps during a liquidity event, yeah, everything's going to sell off or at least take a little bit of a hit because the denominator in BTC USD is increasing in value. Okay, fine. But what really drives the Bitcoin price at this point is basically like we're engineering a supply squeeze by saying we're going to hoard as much as we can and we're going to buy regardless of what the pundits say and what FUD's thrown at us and whether Michael Burry and Steve Hanke laugh at us on Twitter. It doesn't matter because we're going to buy more. And so the price, as any incremental amount of new capital comes in, they're all competing, and they compete against each other. Everybody's trying to chomp at the available supply, and then we get a reflexive bull cycle. And then we'll see the people that are like, you bought some Bitcoin at 7,000. Well, like maybe you want a nice house at 400,000 or whatever insane peaks we get, right? And so you sell a little bit. And I think increasingly we might not see that because of the financialization of Bitcoin, where hodlers immensely rich early and even like not so early, but like people that arrived to Bitcoin in 2018, 2019, 2020 even have a ton of wealth in this in this asset. Like I don't really ever want to sell, and maybe I'll just collateralize and live off it. And that's where it gets interesting, in my opinion.
Yeah, totally. One thing that you touched on that I think is really important to understand is just that these long-term holders set the floor in a macro sense, right? They distribute into strength. They don't perfectly time the tops. They slowly sell into strength, and then they buy into weakness. And you get this supply shock effect on the market once long-term holders lock up a large enough portion of supply. And as we've talked about, as of right now, we've actually reached all-time highs in the long-term holder supply shock, which I personally think is more important than the long-term holder supply itself, because you're also comparing to short-term holder supply. So just looking at long-term holder supply, as circulating supply increases, the long-term holder supply is bound to increase as well. So seeing that ratio at all-time highs is indicative of the portion that they hold is actually at an all-time high. But yeah, like the way I see it is, as of right now, at least, is that we have the fuel laid out in the sense of these supply dynamics on chain, that supply is getting locked up by these long-term guys, also these liquid entities, which for listeners are just entities that have a very low history of selling. So very low likelihood of spending the coins that they've taken in. And so we just now need that catalyst for demand. And so some people have been talking about, is that an ETF, whatever. I personally think all-time highs themselves could be a catalyst, right? Like Bitcoin doesn't need an ETF. I mean, that'd be great if we got a spot ETF. But yeah, all-time highs themselves could be a catalyst for more demand for retail to come in. But what happens is you have Bitcoin's float get so dried up when we get to what's usually the bottom of a bear cycle. And then at some point the demand steps in and then offsets that. And you have to get a price increase, because if people want to get that few amount of coins, the only way they can acquire those coins is to bid the price up. And then once that happens, as we mentioned, the long-term guys actually start to distribute into strength, but because they've locked up that supply while the demand stepped in, the momentum of the price increase has already occurred and the volume now starts to step in. But you have those long-term guys that really set the floor initially and kind of give it that spark in terms of they kind of set the fuel out, right? And then the demand comes in and sets that fire ablaze. So the way I see it is now, we're kind of at that inflection point where the demand is going to step in. We're starting to see that, just through price action. But, I think all-time highs themselves could be a catalyst for that. And as you mentioned, we've seen the first downtick in long-term holder supply. Maybe that's indicative of long-term holders starting to sell off. But I think it's very crucial for people out there to understand because we've been pushing so hard that, oh, long-term holder supply is going up for so long. Once we start saying that it's
Hopium,
declining,
bro. Just hopium, bro.
yeah, just hopium, man. On chain is just snake oil. But once it
Yeah.
starts to
So
go ahead.
yeah, I mean, if we want to touch on that like metric, that I don't even have a cool name for it. I need a cool name, like a liquid supply shock. That sounds like bullish as hell. But so yeah, I basically Glassnode, they give you market value to realized value, which is so when you're talking about realized, there's price, right? BTC USD, and then there's realized price, which because Bitcoin is completely transparent, basically property network, if you want to think of it like that. Every single UTXO or Bitcoin is visible and has a trail of ownership from the time it was mined, and it's pseudonymous. So just addresses own this Bitcoin, they send it. UTXOs distribute. They can inputs and outputs can be combined, but essentially you have this verifiable, immutable ledger of every single time a coin was moved, and at what price, because you can match the price with a exchange rate, or the time it was moved with an exchange rate. And so we see with, I think maybe realized market capitalization is an easier one to understand intuitively. Realized market cap is just a way. It's like a sum of every single coin at the price was last moved. So realized price is essentially, it's just a cost basis of every single coin in the network, according to the chain, according to this property rights network. And so you can kind of think of this like, yes, I can move coins that I acquired that I didn't sell to myself a year later, and then realized price might tick up. But you also have, people that like, I'm not going to sell my Bitcoin at 100,000 or even maybe a million because of my understanding of what this thing is. And so my price for Bitcoin is like, it sounds crazy, but like infinity dollars, and I'm not going to move probably a lot of my stacks. So there is some kind of, like some people say realized price is useful. Some people don't like it, but I think it, it's just kind of one of the most pure forms of quantifying Bitcoin's monetization process. It's like, look at this just accrual of value over time in log scale without all the volatility. And so Glassnode gives us a pretty cool metric called market value to realized value, which is a ratio of the price versus the realized price. And basically, like all of this data we're talking about, it's taking the same kind of data and just interpreting it and viewing it in a different way. So when you're talking about long-term holders accumulating in a bear and then distributing into a bull, so what does that look like when you're talking about the MVRV, market value to realized value ratio? Well, as me and you and all the hodlers and people that have conviction accumulate this free float, well, that gets smaller and smaller and smaller, and then any incremental marginal increase in capital bids the spot price up, BTC USD, as there's just a supply and demand imbalance. And so that price often reflexively gets driven up. And so, but you often see the realized price is just kind of ticking. It's not moving. It's not nearly moving as fast as the spot prices. And so you see, what do you see? This market value to realized value ratio, it goes parabolic. And you see basically with every Bitcoin parabolic cycle top and bottom, you see this ratio go parabolic, and then it crashes back down as what happens. Even if the price isn't falling as much as the ratio is, it's because all of these long-term holders are all these people that have just been, eating up the free float for years. They distribute a little bit. They take some chips off the table. And so those coins are hitting the market. Coin days are in on-chain sense are being destroyed. And that realized price, that realized cap ticks up as a $200 coin turns into today, someone acquired some coins early in 2017 that has a realized price of 2,000. And they sell one of those Bitcoin for today 57,000. Well, that realized market cap ticked up $55,000. And so you can kind of see this with the ratio and the relationship between, these reflexive bull cycles and then distribution. Like from the top of 2017 to really about April of 2020, realized price didn't change much. It was just coins changing hands between people that understood the network. They understood what was happening, even though price crashed from 80% from 20K to 3K, and then it ranged and went everywhere. Realized price just kind of ticked along as it was just people exchanging coins from weak hands to convicted hands, and eventually with a macro backdrop and all this stuff happening, we saw that free float run out. And so what I did with that ratio was essentially, you can see Glassnode provides the long-term holder realized or long-term holder market value to realized value ratio, and the short-term holder realized market value to realized value ratio. And the short-term holder ratio basically just oscillates between one. It's because it's a shorter time frame, 155 days. Sometimes it gets overheated like it did maybe in April, and sometimes it's far below zero, the cost basis of these holders compared to the price when it's May or July or something, when all these people that bought it at 64K are underwater. But the long-term holder is a little bit different. But regardless, if you just basically backwards compute the realized price, you can see a really interesting dynamic with the cost basis of these two investor cohorts. And you see in real time, the long-term holder realized price is just flat for the first part of this parabolic bull market, as it's just, again, like we're talking about, this new money compete and the old money that's still stacking. But basically you can think of all money as like new money coming in, and there's all reflexively bidding each other up because they're just competing for this new supply. And as the long-term holders distribute, well, what happens? That long-term holder realized price, as time goes on and as coins are just spent, this long-term holder realized price ticks upwards. And so when you're looking at the relationship between these two cost bases, it's tougher to get a top, but you see basically a generational buying signal when you have long-term holders and their cost basis is above short-term holders. And so like that's been the 3 generational bottoms. But yeah, I think it's just another one of those metrics that we have in our tool bag that, is just interesting to watch. And I think we're the reflexive part of that bull market. I've seen it with this ratio, which trends up during a bull cycle and down during kind of an accumulation phase like we're in. This ratio of the two cost bases has been trending down all summer. If we enter that kind of market phase where long-term holders are decreasing their holdings, are distributing to the market, that ratio will tick back up. And I think that's the mania time. That's the time when it gets crazy. I don't know if that made all sense. I mean, I'm hopping all over the place.
No, totally. You did a good job explaining that. I also think like running the ratio between the two, I think was really nice. And the little orange line in the post, that's just another clean way to look at the dynamic between the two. One other thing I saw you post today was the URPD. I'm actually putting that in my newsletter today. Do you want to just kind of talk about what that is and kind of what the implications of where we are in relativity to all the on-chain volume that we now have below us?
Yeah, I think it's interesting because like I DM'd it to Preston, but he Preston, before I posted it, but Preston posted yesterday. He was like basically showing the spot volume on some Bitcoin exchange, and maybe it aggregates all the volume across exchanges, and showing that like above 58, we went from 58 to 64 or whatever, but like there's almost no volume there. There's not much trading volume. But the cool thing about Bitcoin, compared to say Amazon stock or NASDAQ or whatever you're trading in the TradFi system, is we have this like native property rights ledger where we can see what coins actually exchanged hands, how much volume on chain was distributed up here, like who was actually taking part of their coins and moving them. And the reality is like it's basically hot air above 60. I mean, there was some profit taking, but ultimately like that kind of blow off top of part of the market wasn't much. It wasn't like we saw a massive amount of from the initial part. It wasn't like we saw in 2017. Everybody kind of started selling and distributing their coins, and holy crap, 20K was 200 12 months ago. Like I'm selling. It was more like it was a derivative led move, and most people were just hodling or buying even, and just like sitting on their hands. And so we didn't get that underlying spot bid, but there wasn't much distribution up there. So like the UTXO distribution, just kind of looking at like these on-chain volume levels, I think it's kind of a new way of visualizing like support, resistance potentially, because if for resistance, right? Like if there was a huge bar of volume at 64K, you'd be like, okay, like there's a lot of people that bought the top, and like they might want to take some profits. They might want to get rid of their coins when they finally break even. Like, I mean, I know I'm not, but some people are. That's just, that's how markets work. That's how psychology works. So the fact that we see no volume up there, I think that's kind of the signal for me that, we'll probably flirt with 58K, 60K or whatever for a little bit, maybe a couple of days, maybe a week, who knows? But I think once it snaps, it's going to be the same as when 20K broke. And it's like, maybe we retest, maybe, but it's like, for the most part, like I'm anticipating off to the races once that happens. I don't know if you do as well.
Yeah, totally. So like, I think first of all, the most important level from just a purely like price structure standpoint is right around 50K. And the reasoning is for me is that that's obviously a big psychological number, but B, that's the point of breakdown from May. So, if you go back and look at the chart, you're setting higher lows, higher highs, right? And we came back down and we set this lower low, and then we came back up and set a lower high. And so just from a pure like price structure standpoint, the second we broke that lower low, that was confirmation, although we already had a lower low and lower high. But once we had came back down and started to go below that lower low, that's full confirmation that we've broken market structure. So holding above that. So, a couple weeks back or a month back when we initially broke above it, we had that failed breakout to about 53K because we got a bunch of leverage that hopped in the system and got kind of eager there. But for me, that level is really important, and that's kind of the bull bear threshold. And then obviously, like you mentioned, that this 58K level, I think is kind of the kind of the last real resistance for the market. I don't think, if we get up to 60, I don't see us slowing down before 64 necessarily. And I agree with you. I think like buying the all-time high breakout is plus EV. Like I think it's kind of the most brain dead trade you could really take. Every time.
Was it you that tweeted that earlier in the year? That's like, it's one of the easiest things to do is just buy Bitcoin and it breaks all-time highs. I remember that tweet from someone, and like, I remember feeling, even though I literally stacked every single day with this like living, eating dirt, stacking sats, and maxing out as much leverage as I could, unsecured leverage, by the way, in the form of 0% APR credit for periods of time to stack Bitcoin to my cold storage. Even though I literally bought every single day, it was like Bitcoin breaks 20K and goes to 25 in like 3 days, and it's like, holy shit, I'm short Bitcoin. And even though you have like everything in Bitcoin, you feel short. And like the people that are sitting on zero are like, okay, I was wrong in 2013. I was wrong in 2017. I was wrong in 2021. I thought I was right in 2021. I'm clearly wrong. I gotta get some Bitcoin. So yeah, dude. I mean, I think it would be probably pretty crazy. I cut you off there. I'm sorry.
No, you're good. I love it. I love it. One of the things that I've really been thinking about lately is this tweet from Mike Alfred, like a month and a half ago, when he said we're going to get these institutional announcements between, I think it was like September, like mid-September and early November. So poor Mike's DMs are probably getting exploded with when announcement questions. But I'm curious because there are very specific parameters around that. I don't know if he was just, kind of shit posting, but when we go back in summer and from summer to now, especially at the end of July, I think the date was July 27th or 28th. I remember pretty vividly when we initially got this huge uptick in whales holdings, and we've seen this kind of perpetual increase until the last like 2 or 3 weeks from entities over 1,000 BTC. And then actually over the last month, you've seen a slight decline in entities over 1,000 BTC when you filter out for exchanges and stuff. But over the last month, you've also seen the 100 to 1,000 cohort start to step up their holdings. So they had just been flat since May, like literally just flat. And then over the last 3 weeks to a month, as you started to see whales slowly distributing, those guys have stepped in and actually offset the coins that they've sold by about 2,000. So point I'm just trying to make here is that, there's nuance to like the actual entities data and clustering them into which cohort. But I'm just trying to say that there's been really large buyers since the end of July, right around the bottom. Right. And also, when you look at like transactional volume, so I don't know if you ever look at this metric, it's pretty new. It's like the entity adjusted transaction count. It's basically showing you that, yeah, okay, you're nodding your head, like the relative volume. Like when you look at the $10 million plus transactions, I mean, they have just dominated volume over the last month. I think they got as high as like 85%. And so I think some of this is potentially like just exchanges batching their transactions, but I think it's probably just large OTC deals that we're not, seeing particularly like translating and right into price as soon as they occur. But you are starting to see more and more supply move to these large entities. And you had Saylor, whatever, a month and a half ago announced that he had bought Bitcoin again. I love how that's just like a given thing in the market now. And we just don't even react to that. But there's so many unclaimed coins that we've seen accumulated by these large buyers. And, Mike isn't the only one that I know. You and I both anecdotally are talking to some of these guys. We just DMing people on Twitter, asking everyone a million questions. And, several of these people are all anecdotally saying, yeah, there were some buyers over the summer. And I'm just curious to see if we start to get them poking their neck out as we reach all-time highs. Because now the incentive is there for them to step out and kind of announce, right? Like I made this tweet a couple weeks ago and I said, everyone thinks that, announcements are going to be the catalyst for all-time highs, but all-time highs could actually be the catalyst for announcements, right? Because these guys are human, and at the end of the day, they're gonna stick their neck out when it makes them look smart, and their investors are gonna praise them for holding this position. If they came out, when it looked like for an on-chain data that they bought at the end of July, moving into August, perhaps maybe their investors wouldn't have been too happy about that. But now getting above all-time highs and being able to say, oh yeah, we bought it, the mid upper 30K, we bought it 40K, all of a sudden they look like geniuses, right? So I'm curious to see if we start to get some of those announcements. I'm kind of agnostic about the ETF. We can get into that if you'd like, about the futures ETF. I'd much rather see a spot ETF, but where I think, perhaps people aren't really thinking about is we've seen all these huge buyers and we haven't really seen anywhere close to the majority of those coins, being claimed yet.
Yeah, I think the first thing is like all the big, macro funds guys, the like literally like the Dahlias of the world in January or February. It was like February, March timeframe. We said, Dahlia was like, oh, and honestly, like part of my thesis, the aha moment for me was like, and one of the pieces at Bitcoin Magazine where I went from being like a media guy to like, hey, like you should do more market stuff, was I wrote the conclusion of the long-term debt cycle and the rise of Bitcoin. And it was taking Ray Dalio's entire basically framework that he made billions on and like studying it pretty closely and then being like, Bitcoin is the solution to all of these problems he laid out in the digital age and the information age. And it was like, it's the perfected monetary asset. And that was kind of like one of my aha moments. And Ray Dalio's come out like, I think he has the biggest or second biggest or one of the biggest hedge funds, like asset under management in the world, like literally like $40 billion. It's like an immense amount of capital to like actively manage. He was like, oh yeah, like, blockchain, blah, 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 nonsense. And like whenever 2018, 2020. And then in March, he kind of had to eat his words. And he's like, yeah, like Bitcoin's interesting, but we don't know. And you just have to know that these guys, even like we trolled them, what's his name? Scott Minard, right? He was like, he comes out, he's like, we're bullish Bitcoin to 100,000. And then he's like, Bitcoin, screw it, Bitcoin to 600,000. And then Bitcoin breaks its all-time highs before his his like GBTC fund thing can get set up. And he's like, we're retesting 20K. And it's like, no, we're not, Scott. But all these guys like are buying in big numbers. And I wish I was more familiar with, and I don't really think there's much clarity here, which is why no one's familiar, but with public companies reporting their Bitcoin, right? Like Michael Saylor, MicroStrategy, like Bitcoin's an intangible digital asset, right? Like, and it's marked. And for like these corporate treasurers, the thing is that's kind of annoying is like if you're buying Bitcoin, then they're on the upside. If Bitcoin 10x is, you can't realize any of the gains, which is fine. It's an intangible, but it's not part of your earnings per share. But if it goes down, it's an impairment and it's marked as a loss on your earnings. So like that's one of the things that's not ideal about holding Bitcoin from a corporate perspective. But the thing is, like all these Wall Street big money guys, I mean, I'm part of the, like I see some of the stuff happening with BM and not just BM, but like the conference and there's some of the biggest names in the world from finance, industry, insurance, everything involved. actively. So like, yeah, they're involved, and very few are like Michael Saylor and will say, hey, we just bought on the way down, by the way, says, hey, we just borrowed 500 million dollars at 6% for 5 years, and we just bought the dip. And then Bitcoin goes to 29.5 one day intraday, and he's getting trolled all hell, and he just
Remember the
hodls, and he
sailors
does,
getting liquidated, FUD?
dude. It was like, yeah, they're gonna have to restructure a trust and distribute his 100,000 Bitcoin. Like this is, and Saylor has all of it constructed in a way where like he's a public company, and I don't know if it's not required for him to tweet it out on the day or after it's purchased. Like, I think he could definitely do it quarterly, but I think we'll definitely see some, where the Bitcoin miners are accumulating, right? We have like a ton of public companies. Go to bitcointreasuries.com, I think. It's like awesome to see all these like, companies populate the website, but I think we're gonna see more of that. Just like the inflation narrative is real. Like even if it's just a narrative, like, I don't think Bitcoin and CPI as much, but it's like people are realizing, Fed officials are saying, yeah, the inflation thing we've been saying is transitory forever isn't transitory. And like, and with Bitcoin, and when that happens, and then Bitcoin smashes its all-time highs, and you've had a bunch of nerds and a bunch of guys with laser eyes screaming in your face saying, Bitcoin's an inflation hedge, you need some Bitcoin, and then it happens, and then Bitcoin rips, it's pretty powerful. And so like the TradFi guys, if they haven't bought yet, which a lot of them did, they're going to buy hard, and the ones that did are going to buy more. And so like, I do think we're going to see some pretty big news announcements. I know we've talked about one that's under wraps that's going to be big, narrative wise, but big in general. So like, yeah, dude, I think Q4 is going to be exciting, and I think a lot of people that are expecting, I mean, I like the halving charts, I like the cycle by cycle charts, but I do believe we just had somewhat of a mini bear market. Like we had a full kind of bear market cycle in the span of like 3 months. It was like derivatives licked, huge, puke of old coins. Okay, narrative FUD. Okay, minor capitulation at a scale we haven't seen. We had a negative 30% difficulty adjustment. Any of these weak operations wiped. All of these ASICs, their values went to nothing. Like, you had to keep the lights on, and anybody that could stay on is profitable at 30K with a 30% difficulty adjustment that had yet to come. And all of these miners in the China-controlled Bitcoin FUD, they just relocated, and some of them are still there. The 0% metric is kind of horseshit, but like how much, just tick off what Bitcoin's kind of gone through, the FUD it's eliminated, where we were a year ago. It's like, okay, Michael Saylor adopted Bitcoin corporate Bitcoin strategy, Bitcoin standard. He's basically calling the Fed's bluff and borrowing as much as he can at near zero rates. In real terms, all of the loans he took are under 0% to buy Bitcoin. Okay. El Salvador, small country, whatever, adopted Bitcoin as legal tender, and it's working. Like in the sense that like, it's even like the Lightning Network .eth people and crypto people like shit on it for like, oh, Lightning's nothing. Look at public channel capacity is 200 million. It's nothing. It's a total joke. Look at this DeFi protocol. But it's like, no, a country just adopted a Bitcoin standard. I mean, or like, there's still dollars, but they just onboarded a nation. They airdropped everybody $30 in sats, and it's working. And for the people that aren't like, there's more Bitcoin users than bank account holders in El Salvador. So when's the next one coming? It's going to come at some point. And so the people that think that just with how much has changed from a narrative perspective, from a maturation perspective, from a FUD busting perspective, I don't think a December top tick is going to happen. It's not like, the people that are expecting, the same old kind of, top bear market, everyone goes home and it's the same old kind of repeating thing. I don't think so. And I'm not saying that there's not going to be volatility and drawdowns along the way, but I think that there's merit to the super cycle kind of thesis there in that sense.
Yeah, I agree. I think, when everybody's looking for the same thing to happen, then the odds of that happening are kind of neutralized by default. What are your thoughts of just the whole 4-year cycle thing moving forward? I kind of stand in the camp with like Willie, where, I'm not saying we don't have drawdowns, but I think we kind of become this more free floating thing just based off of the supply and demand. We talked about a lot of these metrics that we've been following accumulation since the summer, that are resembling the beginning, or you call it the end of a bear market heading into the beginning of a bull market. Do you still think we kind of have these 4-year cycles revolving around mining? I personally don't think so. And the reasoning is because the halving just doesn't have as large of an effect as it did on the overall market, its supply, compared to 2013. Also, as we talked about, miners aren't looking to sell, right? Here at Blockware, we see a lot of these people getting involved in mining. They have access to the capital markets, and they're able to actually cover their OpEx without having to actually sell the BTC onto the open market. And so, with that being said, I don't think that miners, as a subset of selling pressure, is going to be as substantial as things like just flat out exchange fees that are sold onto the open market. Although seeing Coinbase take whatever 10% of their fees and are now reinvesting that in crypto, hopefully most of that's Bitcoin. That's good to see. And then also like an ETF, right? You have like Grayscale, for example, which isn't an ETF, obviously, but they take 2% of their BTC holdings, and they use that as a fee, just sell it onto the open market. And so, if you have some spot ETF, which is probably going to do insane volume, at least several months in, probably, that selling pressure will be much more substantial than that daily mining selling pressure. And so,
Yeah.
I think if you do have the 4-year cycles continue, it's probably just pure market psychology more than actually revolving around the halvings. But anyway, I'll let you talk.
Yeah, I mean, I agree entirely. I think Bitcoin we've entered Bitcoin's second decade on March 13th, 2020. That was like line in the sand. Bitcoin has grown up, but it's like Bitcoin's in phase 2 of its adoption. It was like, goes from like the cypherpunk, internet money, proof of concepts, okay, fringe libertarians, and econ nerds that are like Austrians that are like, holy crap, this is the holy grail. In 2017, it becomes somewhat of like a hype kind of cultural thing where like it's finally breaks in and then draws down 80%. And then 3 years, it kind of ranges, and there's still that diehard cohort of believers that are gaining conviction every single day and stacking, and the hodlers of last resort set the floor like we've talked about. But it's still like didn't really, no one, it wasn't the solution for a lot of these like people that were still kind of in the fiat matrix, or if you want to call it that. And then March of 2020 happened, and the world woke up, and I think the world changed. And so now you see, right, the access to public capital markets, the guys like Michael Saylor, the Bitcoin miners, the more funds and or not funds, the more companies that IPO that have some sort of relation to Bitcoin with access to public capital markets, Bitcoin gets more and more intertwined with the legacy system as a monetary asset, basically as almost a pure gauge. I don't think we're there yet, but I think Bitcoin eventually at $5 trillion to $10 trillion, most of those at a $10 trillion, 500,000, maybe a $20 trillion $1 million Bitcoin, we're going to see Bitcoin trades less like a growing, exploding network, and rather it's like a pure gauge of it's like a fire alarm for what's happening in the fiat system. Where right now it's mostly adoption, right? Like we obviously like quantitative easing, Fed announces a new bond purchasing program tomorrow. I think Bitcoin bids really, really, really hard. But for the most part, it's just, on-chain supply and demand dynamics. Obviously, capital inflows is one side of the equation. But I think the interconnectedness of Bitcoin with the legacy system is a net benefit, not a bad thing like people think. Like the financialization of Bitcoin is great. And I think eventually, like in 2024 or 2025, Bitcoin, whatever the size is, I think personally, at least 10x where we are from here, probably a 20x. When Bitcoin draws down 30% because it's eliminating imbalance and there's a huge derivative blow up, well, it's actually going to probably drag down the legacy system too, in a way, where the equities draw down. And because it's just a function, right, of everything, all assets, the values of it is a function of basically a massive credit bubble. And Bitcoin is just is everybody collectively, or rather individually, calling that bluff and saying like, wait, this game is kind of rigged. I don't want to play it. And so like, I prefer to value, my wealth in this thing. And so you're kind of seeing the monetization process of that take place, where I agree the halvings aren't really the impact. The impact is one, just to find like the people's really understanding Bitcoin straight up, right? Like if we had a billion people that understood what we understand, or not maybe like on chain or whatever, but understood what Bitcoin was as a monetary asset, the price would be a lot higher, obviously. And so it's just a matter of people's understanding, people's education, and that comes gradually. And then when you have, exogenous kind of variables that occur, like COVID, or like, the Fed doing some QE program or whatever, or the next, the $1 trillion coin gets minted. Well, I think Bitcoin might gap, because you have some seller at 63K that's like, they just minted $1 trillion coin and I'm sitting here on a limit order. Like what a And so I think that just, we're going to see that dynamic kind of, change, in the sense that, like, no, it's not like Bitcoin's not a proof of concept thing anymore. Bitcoin's not like okay, it might work. Like in 2017, there was no Segwit, there was no Lightning. Bitcoin couldn't scale. Well, that's wrong. We have entire countries using Bitcoin as a money. And so, like, yeah, Bitcoin can work. And increasingly, it looks to many like there is no alternative. And so, the super cycle is not 80% 3-year drawdowns, but 50, 40, maybe 60, like we just saw, maybe 65, but rounded bottoms, 65%, 50% drawdowns, because derivative excess, speculative mania, and just kind of these same, market dynamics, this psychology. But I don't think Bitcoin's going to draw down 80%. And then people are going to forget about it until 2024. And that's like, oh, having bull cycle. Like, I don't believe like that's what's happening, but I could be wrong. We'll see.
Yeah, totally. Like the way I kind of like think through it is that, the having is kind of bootstrapped adoption, and like number go up is the ultimate marketing, right? For anything. And so for Bitcoin, having these, every 4 years event, like it slowly kind of allowed, adoption to get ingrained in the new people coming on the network. But if Bitcoin only ever went up, then you would have no flush out of these speculators. And then every cycle, the coins have gotten more deeply embedded into the hands of those with conviction in the bear market. And it builds this higher floor for the price, right? If we only ever went up, then the second we started going down, you would have huge convexity to the downside. So I think having these cycles have kind of helped bootstrap Bitcoin in that sense. And they've gotten the momentum of adoption going. So now it, Bitcoin itself as a network is beyond that kind of, threshold of or point of no return, in the sense that it's now a self-feeding thing. You don't necessarily need these 4-year halving events to draw in new demand, right? And so, I think like in the past that drew a lot of new people into Bitcoin purely for price, as you had the reflexivity of this massive bull run effect that initiated from the halving in 2013 and 2017. But yeah, now I think like Bitcoin is beyond the point that it needs that, and it's now has the the momentum of adoption in its favor, in the sense that it's now a self-feeding thing.
Yeah, I mean, I think a lot of people don't understand. There's Bitcoin the asset, but and they're obviously intertwined. But then there's Bitcoin the network, and like, and most people just, if you're looking at it like, oh, speculative mania, you miss this. But just Bitcoin can scale so much faster than people can comprehend, because one, it trades exponentially. You have to look at a log chart, but it trades exponentially because adoption is exponential, in the sense that someone develops some open source code on GitHub for the Lightning Network, and it's a massive improvement, and then it gets implemented into every single wallet and shipped out to 100 million people. And or Jack Mahler says, here's a Strike API. Anybody, any social media platform, you can plug into this if you want, and you can send and receive Bitcoin anywhere in the world, and we'll do the dollar side of things, so no user gets taxed. And so that goes from Jack coding in his basement for the last 6 years grinding, to building and assembling a team and then shipping it, and then boom, 100 million people have it. And 100 million people that weren't using Bitcoin, even if they don't even know they're using Bitcoin to send and receive Twitter tips, they're using the Bitcoin Lightning Network. They're using the Bitcoin network. Eventually these people hold some sats themselves. And so what's the marginal kind of cost or of someone plugging into that network as it grows stronger and faster and just better applications and all of this stuff, and as it embeds itself in the regulatory environment, that's why the price goes exponential, is because Bitcoin, the network, can continue as an open source monetary network, opt-in, voluntary. Western Union or any legacy traditional banking system, they're all doing stuff proprietary. They're all, we're going to do things our way, our central hub, and we're going to talk to you and your central hub. But no, we have an open, decentralized monetary network that anybody can plug into, that anybody can build upon. In the same way that we're sharing content and our ideas and charts and data from kind of a financial or a market sense, there's people that are coding, there's people that are building, there's people that are educating and whatever, and it spreads like a virus. It literally is like this massive network effect. And so I think that's just the most beautiful thing, is that we get to live through this, man. Like, we're just watching it all unfold, and we're like, oh, yeah, another huge announcement. Like, oh, the city of Toronto today is like, hey, we're going to heat houses and commercial buildings by mining Bitcoin and then just sending heat. And it's like, why would we do that? Because there's an obvious economic incentive. And so just something like that, like today, where it's like, it's like a kind of a non-event, it's pretty cool. But like, think about how far Bitcoin has come, in the sense that like one of the nicest Bitcoin miners, the ASIC, the Antminer S19J Pro, I think I said that right. I posted this the other day, is more hash rate in one ASIC. It's like $10,000 than the entire Bitcoin network did in 2013. So just like, I mean, and that's, yes, Moore's law and like technological advancement more broadly, doesn't matter about Bitcoin, but like, just think about how fast this thing is growing. I mean, you're looking at it from a day-to-day, hour-to-hour lens, and Bitcoin's pumping or dumping, or it's volatile or whatever you're looking at. It's like you can't see that. But when you zoom out and really can understand and contextualize what's occurring here with everyone adopting this thing, it is just, what a time to be alive. It's awesome.
Yeah, absolutely, man. What are some of the I asked Mike this last week, and I really like this question. I'm gonna start asking everybody this. What are some of the like key milestones or inflection points for Bitcoin that you think are important for adoption? So, the obvious one is El Salvador, right, and them using Lightning. But from kind of a more philosophical standpoint, I think Bitcoin getting ingrained into politics, I think is really crucial, because then that becomes kind of a competition amongst different politicians to, push Bitcoin further and leverage that as a form of saying, hey, Bitcoin is for the people. I want to promote Bitcoin because I'm for the people. I think like politicizing Bitcoin is one, and then also like funds being compared to Bitcoin, right? So being benchmarked against Bitcoin, that's going to be really crucial, because if Bitcoin is now in this basket of asset classes that you're being measured against with bonds, stocks, and now whatever you have, like 5% Bitcoin or even 3% Bitcoin, that's going to grow to a lot larger percentage, right, of your portfolio. But if you're being measured against that, you're going to have no choice but to take a small position to hedge against the fact that you're being measured against that. And then it almost becomes a self-fulfilling thing, as Satoshi said, in the early days. So what are some of those milestones and inflection points for you?
Yeah, I agree with the politics thing. I think the cool thing is we've seen like the Republican. I mean, if we're talking about America, we've seen like Ted Cruz and Florida and Texas be friendly with Bitcoin, and that shows the kind of the jurisdictional arbitrage and competitiveness to come, which is really really cool. And two, I think there's some stuff happening under the surface, and I can't really reveal much, but happening kind of with around our company, or just like associates with Bitcoin and politics, which will be, we're doing some stuff on the surface, Bitcoin only kind of stuff in terms of education, in terms of lobbying efforts, in terms of this stuff, where I really, really I'm pretty confident that in 2024, if you're a Brad Sherman type, if you're actively not maybe not a Bitcoin evangelist, right? You don't have to be pumping Bitcoin tweets, but if you're against Bitcoin actively, you're gonna not be in office for long. And I think that's coming. And I don't know if that unfolds on a presidential level, but I know, for local jurisdictions and stuff, from a Senate or a House perspective, that's coming. Or it's happening under the surface today. And I think we'll see a little bit of it in the 2022 midterms in 2024. And I think that's really, really exciting. Where if you're actively against Bitcoin, you are, you're like way out of the ordinary. You're like, it's like you're crossing some line, because guess what? 120 million Americans have exposure to this thing, or like everybody has S&P 500, and there's 10 companies in S&P with it on their balance sheets. Like, are you crazy? So I think from that sense, that's kind of another thing. And in terms of like, another milestone, I think like some sort of G7, or like, and I think they're still a little bit away from this, but some like not in El Salvador, but like a legitimate, big country. Like, what if, and it would be very interesting from a geopolitical standpoint, but what if it like is revealed that Russia is actively mining and stacking Bitcoin, or just like, I just threw that out there, but like, or that Saudi Arabia was like, it was building out a massive mining farm, which like, again, that will come. Like, play the tape 8 years from now, and like bet the farm that Saudi Aramco and the Saudis and anybody that's producing oil is going to be mining and stacking Bitcoin, and it's going to be on a country level as well and a sovereign level. But like, when does that happen, and what's the FOMO like after that is going to be super interesting, because I think there's a chance that it all unfolds really quickly. People say 10 years, and it's like, yeah, 10 years. Like, I mean, that sounds quick to some. It's like, oh, 10 years, a decade, that's fast. But like, this can unfold really, really quickly, which, a lot of people aren't expecting, especially if you're like, oh yeah, it's gonna go up to X amount, and then I'm gonna be good for another 3 years, right? If you're planning for this bear market, or you're planning for something, and we see a G7 country be like, hey, yeah, we're adopting Bitcoin as legal tender, and we're stacking, and Bitcoin's, we're like, we're gonna give Bitcoin to citizens, or whatever, like. That's something that I think is one of those lines. El Salvador, obviously the first domino, but I guess maybe a central bank. But again, they don't have an incentive to announce it, and they lose all credibility when they do that with their own currency. So yeah, I mean, these are all things that will come, and we can say all of this. Like, you can say the craziest Bitcoin prediction, and it sounds outrageous now. And in 5 years from now, you'd be like, wow, or 10 years from now, you'd be like, wow, Will was a visionary. Like, how did he know that was coming? Because like, it's just, it's a self-fulfilling prophecy. I truly believe that, from a game theoretic sense. You don't have a choice to play. It's just a matter of when you do. And so, yeah, let it unfold.
Totally. I love that, man. And with that, I think it's probably a good time to start wrapping it up. I just want to kind of give you the floor to kind of get anything off your chest, if there's something that you wanted to address while we were on here we didn't get to. If you want to say that real quick, and then also just plug yourself in, man, and like plug in your newsletter and your Twitter and all that.
Yeah, man. I mean, this is really fun. We talk about a lot of this stuff, most days or most weeks. But to really sit down and hash it out for I think an hour and a half was really fun. And just in terms of where you can find me, just on Twitter at Dylan LeClair _. I did a deep dive with Bitcoin Magazine, and so we'll be rolling out on Substack. I don't know when you're dropping this, today or whenever. It doesn't matter, but I think we'll be rolling out that on Substack with free and paid tiers, and we do that daily. So if you want to see some of that, just hit me up. My DMs are open. I try to get to most of them. I don't get to most of them. I don't get to all of them, but ping me again. But yeah, man, I mean, this is really fun. And I'd love to, I don't know if we're going to start a podcast, but I'd love to just do another one of these chats with you, maybe at a BM.
Yeah, totally. Well, take it easy, Dylan, and thanks for coming on. Hopefully we can get you back on in another couple months, man.
Appreciate you, bro.
See ya.